Good morning, good morning. Good morning, everyone. Welcome to the tradingsyndicate.org. I'm JJ. Thank you for joining me today as we navigate this market. Morning, Nano, Green, Hank, Raj. How you guys doing? Oh, good afternoon, Raj. Well, we finally got a bit of a liquidation. And welcome to the folks joining us on YouTube. Hey, Alexander, how you doing? All right, how are you? Good to see you, my friend. Good stuff, Nano. Hey, Troy. Yeah, we got a little bit of volatility. Right? Distribution, exactly. We saw some distribution. Finally saw some distribution. Okay? So we had somebody ask, what happened? Why do these things happen? So what happens is when inventory gets long in these markets, right? Inventory was long here. And we were just kind of going back and forth. And then the news came out. Hey, Ali, how you doing? Kevin, Oman. When the sellers started to compete underneath 64.77. Now, what happens when news comes out? When news comes out, the order book, right? The orders that you see in your DOM, right? They thin out. They get really, really thin, okay? And where you see 20 or 30 contracts at every tick, when news comes out, because of electronic trading and it's so efficient, it pulls all the orders off the order book instantly, like in microseconds, milliseconds, microseconds, whatever the fastest, unit measurement of time is, it pulls those orders. And what happens when those orders get pulled? Large traders are trying to get rid of some size. So all it takes is a group of large traders trying to sell a large position at the same time. And when the order book thins out, the market just drops. And that's why we had this massive drop from 64.77 all the way down to that 64.53 low. You get a big 20-point drop, right? Now, we dropped right down to that first set of single prints. And that's exactly where the shorts were trapped from yesterday. Not yesterday, 2 days ago. Sorry. So those shorts are opportunistic buyers. As soon as the market came down to that area, they all jumped in and started buying, and you get that move back up. Now it's kind of going back and forth, settling in. Let's see, we'll open on a gap down because we're going to open underneath yesterday's low. And we'll see if that gap fills or if it does this. So that's the big thing. We have 25 minutes to the open. So we're going to see if we open on a gap. It'd be good for us to have a gap down because if we have a gap down, that'll force more of that inventory out and we can fill some of the short positions of the people who got trapped 2 days ago. So that's in essence what's going on. Those are the mechanics of markets and how they work, right? See, in the old days, when traders would have to, pull orders and put orders in, it took minutes. Now you can move the order book so fast. It's just you blink and all the bids and all the bids are gone. It's pretty amazing. Hey Patty, how are you doing? Good to see you. So now what's the takeaway? What's the practical takeaway for us? As retail traders, please be careful when news comes out. Try and be flat. Because what happens is you get these big moves, and there's just no way that we can trade fast enough, right? Now, that's something that, institutions, they have very, very complicated, sophisticated software programs, and they will help them. They trade, they have their algos and all that stuff. When you're clicking on a mouse, it's just impossible you know, to be able to trade faster than an algo. I mean, if you look at Bitcoin, it put in a new high on the overnight, right? It put in that high around 124. What was the high on Bitcoin? 124, 533 or something like that. And then they just banged it down. It's a speculative asset, right? So, of course, they're going to, see some liquidation, right? So, let's see what happens. Guy was close. Yeah, so, we'll see how quickly that liquidation gets bought up. We went right to the 200 SMA on a 4-hour chart. I'll show you guys here. There you go. So, here you can see that liquidation, how we came right down to those single prints, right? Found the bid, about 3 or 4 ticks underneath, and then straight back up. So we're looking to see whether or not we open above or below the previous day low. And then, of course, we'll see if we open, if we do have a gap. The big question of the day is, do we fill the gap, right? Well, I got to keep the people happy, Teen, right? Got to keep the people happy, right? Give the people what they want. You want moving averages? We got moving averages, right? At JJ's House of ES, everything's on sale, right? We will not be undersold, right? uh, yeah, the liquidation was needed, very much needed, right? Definitely. Yeah, took every single stop. We took all of the stops. We broke that structure. Remember we were talking about this structure here a couple of days ago? We took that out. Took out the poor low. Now check this out. We still have 20 minutes to the open. Okay? If we get back and open inside yesterday's low, that poor low will still be valid because according to the market profile people who created it, what happens in Globex, it's like what happens in Vegas stays in Vegas. What happens in Globex stays in Globex. So if we were to open, say, at 64.70, that poor low is still valid. Just remember that, right? That's according to them. That's why sometimes a market will fill a gap in Globex and then go back up, and people will be wondering, but it filled the gap. There should be more selling. Not quite, because you know what? All the early birds caught the worm here, right? Man, you want to talk about hotkeys? I don't know. I don't take enough trades to warrant using hotkeys. Hey, Diana, how are you doing? If you split W period, yeah. Uh, because of the quick liquidation? Yeah, you know what that is? That's just where the order book, there was no orders in the order book at the time, right? And if you split that out, let me see. Uh, now that's weird. Now you're the Sierra chart expert. I'm using CQG as the data feed, Diana. I don't have any skips at the top. Oh. Oh yeah, I've got all these weird. That's right. I need to adjust my thing. I've got the fives and stuff where it's all shows the same. Yeah, that's just because there was nothing in the book there. Nothing in the book to transact. Pretty simple. There were no orders, right? Do I use the DOM or refer to it? I put my orders in on the DOM, right? I put my buy, my stop, and then my when I get hit, then I put my sell orders in. I don't look at the DOM for trading. The DOM is an order book, okay? So the DOM is expressions of interest. They're not completed orders, right? This is the only thing that matters. These are the transactions. You see? Somebody bought, somebody sold, the transaction is recorded, right? This is the only thing that matters. The chart, the 1 minute chart, is just a graphical representation of the time in sales. That's all it is. So the chart allows us to take this data and put it into a form that we can follow with our eyes. But before all this stuff existed, right? Before 1995, you know, before Windows 95, right? All trading software was really crappy, and all people had was a time and sales to trade with. The charting software wasn't really that great. So tape reading was where it was at, right? So the other thing you got to remember is no trader in his right mind is going to show his hand in an order book. They'll pick your bones clean. I have not met anybody who makes money trading on the DOM. There's some people at prop firms who do. Do you know when I use the DOM or a level 2? Is when I'm working a deal, right? And I need to make sure that my market makers are not screwing with my orders, right? That's when I will use a level 2 screen, right? Because I need to move positions, right? But for retail, you don't need it. It's not necessary. What you want to do is you want to keep the amount of information that you're looking at for analysis at a bare minimum, right? The simpler your analysis, the better your execution is going to be, right? You execute based on business, right? And you don't have to think about 20 or 30 different things, right? Keep life simple, right? See, look, we have a seller right at yesterday's low. Hotkeys don't work, don't help you, Mike? Maybe try a hot pocket. Dr. Evil seemed to like them. Omen, for questions on software, ask that in the software area. There's a section that says all other software, and we have people who are very well versed with all different versions of. I'm a Sierra guy. We have, maybe somebody will be able to help you with that in that area. So, folks, today our session's going to be cut short by about half an hour. I was lucky enough to get an appointment with a certain doc that I've been waiting for, and in the UK, you got to take what they give you. So, we'll be cutting it short about half an hour. The thing is, Juice, you really do only need the 1 minute chart. I like having the TPO chart on the screen so my longer time frame traders know where we are in the neighborhood. So the TPO shows us the map of the city, right? This is the map of the city, and this is the map of the neighborhood we're in, right? So how does that help me? Well, if I know that down here there's single prints, I'm less likely to short here. So what the TPO chart does is it gives me situational awareness of where I am in the distribution. That's really it. I don't use the TPO chart to trade from. I use the 1 minute candles to take trades. I use the TPO chart to tell me where things are at. Like the stops, for example. Right? But, if you have a half-hour candle chart on one screen, and your DOM and your execution DOM and your 1 minute chart here, that's all you need. That's why you really only need one screen to trade with. Now, the overnight point of control is up here at 64.85. And how many contracts is that? 3,314. I wonder if we can put in 3,315 contracts here before the open. Hey, Dan, how you doing? Hey, Renee, how are you? Good morning. Yeah, I'll leave that up to you, Dan. I'll leave the politicians and the Fed guys up to you guys. I don't even watch that news. I just let the chart tell me what's going on. By the time I try and figure out what's going to happen in the news, the trade is to about half an hour old. You know? Buying retention is really simple, Nano. You don't have to do a lot of fancy volume analysis. So you pick a level, right? Say you pick a level and that level is $5, right? and you sell 1 million shares of stock over $5, right? When you break $5 and say go to 4, what is the percentage of people that bought over $5 that are still holding? That's all buying retention means. That's all it means. And you don't really need to calculate it. Buying retention, you know why I use the words buying retention? What that means is, say I pay you, right? I'm a stock promoter, and this is where this comes from. I want to see how sticky the buying is over a certain level, right? So I say I pay you to bring in 1 million shares of buying, right? My deal's at $5, right? And I say, listen, if you bring in 1 million shares of buying, right, I'll give you 100,000 shares for free, right? So, or I give you 200,000 shares and you can bring in 1 million shares of buying. So I give you 200,000 shares and you bring in that 1 million shares of buying, but are the people you buy in, are they pikers? Are they just going to buy for the day and sell? Or they buy and hold? I want people to buy and hold. I want sticky buying. So this is how I used to measure promoters, right? Because I pay promoters to bring buying into a deal, to go out and convince you guys to buy, right? So if a guy goes, listen, I can do 2 to 1, 5 to 1 or 4 to 1, right? I want to see how good they are, because if they bring in people who just flip out in the afternoon, buy in the morning and flip out in the afternoon, I don't want that. I want promoters who bring in people who buy and hold. That way I can sell more stock and build a nice chart, right? I execute trades off of DOM because it is quicker. Yes. So it's something I use, and it's something that you won't hear of, buying retention. For example, let's look at these markets here. Just pick a level. So go, you know what, 64, 68. What are the percentage of people that are long that are actually going to hold into this flush? Because if the buying retention's pretty good, then most probably when we get back over 68, the market will move quickly up to the upside. If the buying retention's not that good, we're going to have a lot of people coming in here and pounding on it, right? And it's just something I use to see how sticky the buying is. I want sticky buying. When I pay someone to bring buying in, I want that buying to hold past settlement. Hey, listen, if you're going to be a salesman, stock promoter is the best thing to do, right? Like, hey, listen, if you can bring in $400,000 worth of buying every week, I'll pay you 100 grand, right? I'll pay you $100,000 in cash to bring in $400,000 worth of buying. I'll do that deal all day, every day. No problem, Nano. So that's what I used to do. Not only did I execute trades, but I would have, like, you guys remember what a Rolodex is? No, you don't. You'd have, like, you'd have a list of promoters that you work with. Some were horrible. Some would take the stock and sell it right away. Wouldn't bring any buying in. And then you have to, like, tie them to a tree or something, or hang them upside down off a bridge until you get it back, right? You know. uh, what a life. Remember Rolodexes? Yeah. Well, send me your phone number, Tilt. I'll be able to use you in about 6 months. All right, so looks like we're gonna open on a little bit of a gap here. We'll just use the levels. They seem to be working quite nicely. What are my trades off the open? I'm hoping for more liquidation. But really, if we open and we can't take out that low here at 64.60 or 59 and a half, we'll probably rotate back up. That's sort of your gateway to lower price. Now, after a big liquidation like we just had, it is not unusual to go and test that overnight low again, right? So don't be taken by surprise if we get down to the 64.50s again, okay? That is entirely possible. Okay, 2 minutes to the open. Creeping up on that previous day low. We're creeping. It's going to be interesting. Oh, you left the business in the late 90s? I wonder if we ever worked together, Tilt. Did you ever work with any crews out of Vancouver? Maybe Long Island? San Diego? Texas? Salt Lake City? I've worked with all those crews. Florida? We probably crossed paths. Miami? Boca? We should talk. We probably know some of the same people. The good old days. No gap, ladies and gentlemen. No gap. Okay? No gap. Now, that is something else. Do you see that? Now, I'm honestly surprised that we're not testing that previous day low. If you are long, remember that there's going to be some selling up at 72, that area. Oppenheimer. Oh, that's cool. Right. I want to see what's hanging out underneath that previous. There we go. There we go. Come on, show me what you got. Right. I'm looking for bids now. The market's going looking for a buyer. So we opened and we're rotating down. Right. If you're short out of the previous day low, you'll be looking somewhere around 62 for bids. Just in this area here. I'll let the large traders work this out. No reason for me to execute in the middle of this. If we accept over the open, look for a little run up to that A high. Not yet. Not ready yet. See, this area here, I'll let the large traders work out the open. I would rather go long over 68 if I was trading at pure TPO. Because it tends to go back and forth and work out this level, right? It's funny, at Oppenheimer, I had one of the guys who he ran about $800 million. He was a friend of ours. And every time we needed to park a position, he would take it. Had to sell out nowhere. Didn't know where to go and call our buddy at Oppenheimer. Like, what do you guys want now? Okay, how much is this going to cost me? Look at those bids coming in. Look at those bids coming in. See, look at all the short covering underneath yesterday's low. Well, there's a seller at 66. They kind of stopped selling around 63. There's no trade yet for me. I'll just wait. I'm thinking if we come down and test this stop and then come back up, that would be a better trade than just trying to catch it in midair here. Let's see. All right. Otherwise, I got to wait until it gets back over the open to go long. Right there, we're going to slowly... Oh, look at that bid. The bid came in. There's that bid. We found the bid. Right? Somebody bit right there at 63.5. Yeah, but they're selling into it here, so it's kind of boxed. You see? It's like a tight little box right there. Don't be impatient. Just there we go. Now we see signs of life. Right? There we go. Right? So if you grab a quick long, right? I'm long 68 and I only got one and I'm out at 70 3/4. I sold here because I know there's a seller here. Now let's see if it holds. Let's see if we backfill. Let's see if we backfill the open. Right, if we can hold above 67, right, I'd say, oh, let me be sort of 68, 67, 68. There you go. Long 69 3/8. Out one at 72. Out the other one at 73. And I'm flat. So what I'm doing is I was buying backfills. We get past the sellers here. We'll be looking for 75. Okay? Beautiful trade, Howard. Well done. Beautiful. Now have a coffee. Well done. Well done. There you go. Right? Nailed it. Nice work. You've been working really hard on this. I know you've been putting blood, sweat, and tears into this business. That's good, Howard. That's really good. Love to see it. Sweet. Okay. What's our next move? What's the next order of business? There is a seller at 73 and a half, right? It's just kind of poking around back and forth over VWAP. I'm going to backfill this move a little bit. Sometimes it's fun to go and look at a volume profile, and you just go and look at that move and see where the bodies are buried, right? You can see, look, there's the position, right? So now we're going to take this cheap stuff that we got on liquidation, and we're going to go sell it up here, right? That'd be the business plan, right? And that's how volume profile can help you, right? When you run one of those, you don't have to have TPO, right? Raj, in this market, remember, we're at all-time highs. So we only have the Globex inventory from Globex and yesterday. That's really the only inventory we have that's above us. And a lot of those people got flushed out in that news move, right? So oftentimes after you flush a market, and we flushed it hard, right? We basically held everybody upside down and shook all the position out of their pockets, right? So we've got sellers up here, right? It's okay. We need a two-sided market, right? So these sellers are right here. So remember our volume profile, right? If we, sorry, I should have left it on there, right? If we backfill, right, it's more likely that we'll backfill to this area where the position is, you see? Right? We'll just come down here, have a little fire sale back to where we bought it, stop selling, and then lift price as more buyers come in. If people are interested in building positions, the early morning session in London was insanely choppy. And I did a little exercise on how to build a small position and then sell it for a couple of points. It's on the YouTube. So say you're shorting. Say you're short 73. You got your stop at 74, right? What you're looking for is you're looking for bids around 68, 67. Hey, AZS, how you doing? There we go. There's 69. 69 and feeling fine. Right? You short 73, 72. Go grab yourself a couple of points. Put some bids in. I notice you always teach inventory from a buy low, sell high method. Do they not initiate short? Wholesalers only short when they run out of supply, right? And it really doesn't matter. Remember, OJ, the goal of the market is distribution, right? You go to Walmart, they're trying to sell you something. They've got 1,000 TVs. Look how we hit 60, 68 and then rebounded, right? We came right back to the position. Check this out. It's so cool, right? Boom, right back to where we bought it, stopped selling. That brought people into the Walmart, and there we go, right back up. We can raise price, right? It's all about distribution, OJ. It's all about distribution. I'm good, AZS. I'm good. Right? Right? We're trying to get you long, right? We want to sell you something and have you come back tomorrow and buy some more, and come back the next day and buy some more, right? That's what a market is, right? We don't want you returning merchandise, right? But if you do start to return merchandise, we're going to sell it underneath you. So, you're going to return it and not take as much money back. Yeah, we're scrubbing VWAP. Exactly, Lear. You see, you were listening when I said that, right? Sell as much as you can, as high as you can, for as long as you can. And then you put it on sale and you do it all over again, right? We are just basically glorified used car salesmen. You see, wholesalers, Juice, what they do is they allow you to buy what you want at the price you want. So if you came to me and said, look, I need 10,000 shares of this stock, and you're a good client of mine, and I only have 3,000 in my inventory, I will sell you 10,000. I'll sell 7,000 short and then try and buy it back cheaper, right? So if we didn't have market makers, if you went to buy 10,000 shares of a $5 stock, you'd maybe get 500 shares at 5, 500 at 550, right? 1,000 at 6, right? You wouldn't get the stock you wanted. It's called liquidity. Liquidity is the ability to transact size without adversely affecting price, right? So market makers provide liquidity. So market participants can buy and sell what they want at prices close to where they want to transact, right? The good thing is that's all you need to really worry about now. Now you can get back to trading, right? You don't have to go down the market maker rabbit hole, right? So how do you take advantage of this? When they're done selling, that's when you buy. When they initiate selling, that's when you short. Those are really only the kind of trading. The trading's based on two simple things, right? When supply runs out, price goes up. When sellers start to compete like they did at 64.74, price goes down. Because if you're selling and I'm selling and Lear's selling and Raj is selling and Nano's selling, we're all going to try and outcompete each other to grab the client, right? It's like you walk onto a car lot and four salesmen swarm you, right? If you think about the practical aspects of markets, it will really help you. See, now we ran out of sellers, we ran out of supply under 71 and a quarter. So the market is going up 72, 72 and three quarter, 73, and those sellers are still there at 74, so they're going to initiate again. Why? Because if you sold at 74 before, why wouldn't you sell there again, right? The only reason you would raise price is if you see buyers lining up, like so, right? There you go. Now, once we get over 75, not yet, but the level's working, right? Once you get over 75, we'll look to go from 75 to 82. But it's not quite ready yet. It's all just common sense and business. That's all it is. I don't like trading around VWAP because it's particularly choppy. Yes, all wholesalers do short sell, but not all short sellers are wholesalers. Right. The good thing, Kunj, is you don't have to go down the whole rabbit hole, right? What you guys really want to focus on, and what we teach at the Trading Syndicate, is to teach people how to take common sense trades, right? So remember I said over 75? Now, if we get up over 75, right, I'll give it to the next candle because this could be like a little false break. But once the market accepts over 75, it'll rotate up because the position is underneath us, right? So wait for the next candle. There. Now the next candle opens. It might dip under 75 again. If it doesn't, you buy this little area, you put your stop underneath the level, right? And then you put a sell order, maybe 77 and a half, 77 and a quarter, right? And then you monitor the trade. Watch the offer, right? If the offer can't take out the top of that candle, then you know the sellers are competing, right? So you have situational awareness. See? Remember how I said it might dip underneath 75 and come back up? Right? And if it's really choppy, give it some time. Now, if you miss the trade, you miss the trade. It's not the end of the world, right? It's not the end of the world. Let them work out 75. You don't have to buy 75. You could buy 76, right? Once it cleans it out. There is inventory here. You see these trades here? So there is some inventory, right? A little bit slow going, right? Now you can see that there are sellers here, right? So let them go back and forth and work this area out. Little bit of patience, little bit of common sense. And it's okay if you take the trade and you get stopped out, just chill and wait until it gets over that white line, right? Oh, they just poked their head over it and they got hit, right? So now you know that there are sellers here, right? You can get so much information off a 1 minute candle chart and a straight line. There you go, right? So you buy the 76, 76 half, sell a little bit at 77 and a half, right? Off you go, right? Just clip in and out, get used to that. get comfortable with the price action, right? We're looking for 78 and 3/4. There's 78 and 3/4. Now, depending if if there's a decent amount of buying, we'll go up and offer 79. But if not, we'll come back and find buyers and entice them to come back up with us. No, Raj, the singles will close here at 83 and a quarter. Right? There we go. Right? Remember I told you guys, once we clear 75, your target's going to be 82 and a half. So that tells us when we had a bit of a fire sale because of the news, what did that do? That brought in buyers. Right? And we trade accordingly. So everything we do at the trading syndicate, how I like to teach people is to have them use practical information, right? Keep your analysis simple and really focus on execution. The reason for rotation up is because nobody needs to sell anything. This is a really good question. Why do markets rotate a higher? Well, because all of the inventory is underneath. So what do you do in business, man? You take this and you try and sell it up here for profit, right? So there's nothing for sale under 75. You got to pay more. Right? You deal with it every day in life when you go shopping. Right? Especially when you're buying something that everybody wants. The price goes up. Right? And order flow is just a fancy way of saying customers. So if you have a lot of customers coming in to buy, the sellers will go and go, hey, look, what a good day. Let's raise price. Do you understand what I'm saying? Close your eyes and pretend that you were the seller, right? Instead of a buyer, not a short seller. Close your eyes and pretend you're selling 500, 1,000 contracts, right? This is sellers competing, right? They all started to compete. That's why you get that big red candle, right? So what I'm trying to explain to you is that when you have inventory, you take it and you sell it at a profit. And then when people don't want to buy it, you put it on sale. That's just what happened. We just had a little flash sale again. Of course, I'm looking in both directions, right? Otherwise, if you get biased in one direction and the market goes the other direction and you're stuck in one direction, do you understand what I'm trying to say? You're trying to you're trying to see the battlefield, right? So you don't get clipped, right? Don't worry, you've only been in the room for a little bit with us, so it's going to take you a while to understand these concepts because most people don't talk about this in trading. They talk about, moving averages or crossovers and stuff like that, but they don't actually explain the business reason why price moves up and down. They'll say it's they'll say it's random. So when people say things are random, it means they don't actually understand why price is moving. Right? Right? Now we're having a liquidation back down to cost basis. Cost basis is how much you paid for your crap. You put it on sale, but you ran out of buyers, so you had to put it back. You had to put it on sale at lower prices. Now let's see if that brings in buyers. Right? See, it brought in buyers under 71. You understand what I'm saying? Keep with it. You'll get it. Right? Nice trade, Lear. Nice trade. This is called backfilling, right? The market goes up, and that creates demand. Then you go back and fill in that demand with supply. This is called distribution. That's how you sell size. Right? Yeah, it's all about supply, folks. It's all about supply. Right? Don't worry about the demand. We'll look after that. Just worry about the supply. Right? Yeah, and as Nano says, look, if you miss the trade, it's okay. There will be other trades. That's very good, right? Right? And as a professional trader, why did we miss trades? Right? Hey, nice work, Diana. It's good having you back with us. Say hi to the family. Have a great trading day. Right? So yesterday, for example, I missed a couple of trades, and it was purely due to lack of discipline. Right? It wasn't a fear. It was I was distracted, and I wasn't on the ball. So you use that to correct. Look below and fail of 75, looking for 78 and 3/4. And folks, like I said, unfortunately, I have to cut it short this morning by about half an hour. Got to run to the old dock. Thank you so much for joining me. We'll see you tomorrow. I'm here every day, twice a day, 7:30 in the morning UK time and 9 a.m. Eastern time. Come join us at the Trading Syndicate. We will help you learn how to trade with common sense and simplicity. Thanks, everyone. Have a wonderful, wonderful morning. Trade smart out there, okay, folks? And don't take any candy from strange market makers. I'll be back in a little bit. Thanks so much, folks. Bye for now.